So in recent months, both cryptocurrency and CBDCs have received considerable attention. If you've been so confused about the difference between these two, then this video is for you. Hi guys, in today's video we're going to talk about CBDCs and cryptocurrencies. We're going to focus on the similarities and differences between these two virtual money. So I want you to stick to the end of this video to find out the differences and the similarities between these two virtual money. And if you are new to this channel, welcome to Crypto Sage. On this channel, we provide useful update trading tutorials, how-to videos focusing on cryptocurrency. So make sure to hit that like button below, subscribe to our channel, and do not forget to hit the notification bell to get notified when we drop future videos. So let's move over to the video. So the first thing I want you guys to know is that cryptocurrencies and CBDCs, they are like brothers. They are born out of blockchain technology and they share some basic characteristics, but they are very different from each other. So in this video, I'm gonna break what these two virtual money means. So we're starting with cryptocurrencies. What are cryptocurrencies? If you are new in the world of crypto, a cryptocurrency is a digital asset such as Bitcoin, Ethereum. They function as a store of value and medium of exchange in a decentralized network. This means that there is no central governing authority controlling these assets. Cryptocurrency transactions are stored on a blockchain, which is nothing but a public distributed ledger. This ledger contains all the details of all the transactions made on the network. Users can volunteer to become nodes and save a copy of this ledger on their system. All other users have access to this ledger and can view all the transactions stored within the blockchain. So now that I've break down what cryptocurrencies are, let's talk about CBDCs. For example, the US dollar, the British pounds. Let's talk about what this virtual money is. A CBDC, or central bank digital currency, is a virtual form of a country's fiat currency. They are a store of value and can be used to make digital payments for goods and services. They are issued and controlled by the central bank of a nation. CBDCs uses blockchain technology to verify and store transaction data. However, they operate on a private permissioned network. This means that the general populace won't be able to take part in the verification process, and the transactional data will not be disclosed to them. Instead, nodes are chosen by the central bank to participate in the verification process. These nodes will mostly likely be banks and other financial institutes that facilitate transactions in this system. Now let's move over to the similarities between these two virtual money. Both cryptocurrencies and CBDCs are virtual assets that exist in online infrastructure. They both reduce the need for physical cash and streamline paying for goods and services. They also use the basic concept of blockchain technology, like storing data in blocks and using nodes to verify transactions. But their similarity ends here, as the blockchain they run are very different from each other. So let's talk about the differences between cryptocurrency and a CBDC. Firstly, cryptocurrencies focus on decentralization. They remove the need for a central authority to facilitate transactions. On the other hand, a CBDC, while utilizing the transparency and security that blockchains provide, is still entirely centralized. A central bank oversees and facilitates the transactions with the help of other third-party organizations. And unlike cryptocurrencies, CBDCs act only as a means of transferring value. In a nutshell, we can say that cryptocurrencies are private money, whereas CBDCs are government-backed form of money. Another difference is that users that use cryptocurrency have an immensity when they make transactions on the network. However, CBDCs will be attached to a person's existing bank account, which will contain their personal information. And lastly, a central authority controls CBDCs, so scaling the network is much easier. In a cryptocurrency network, nodes have to reach a mutual consensus to change any aspect of the network. This could present a challenge when the network needs to scale, but the nodes are not in agreement over the way forward. And that will be all for today's video. If you've enjoyed this video from beginning to the end, please hit the like button below, subscribe to our channel, and turn on the bell button to get notified when we drop useful videos like this. Meanwhile, you can also check up our other videos. See you on the next video.